risk, around your psychology. We might talk about a few of these things. But yeah, it was really kind of age 22, 23 when I fully committed.
Right, thank you so much for the answer. And truth to be told, I also started doing BSc economics. And then when I graduated, I wasn't really too sure if I would ever get into financial markets because it was just a very big dream for a small teenage boy. And then I did MSc in fintech, and then I somehow landed a job in a bank and worked my way up. I think we all just have kind of similar sort of experience, as I would like to say. So yeah, thank you so much for that. And I'm gonna ask you the next question now. Now, this question is: what's the most intense day that you've ever had in the markets? The kind that you will never ever forget.
Wow. Well, I started in '06, right? So my baptism of fire was great financial crisis that kind of reared its head a year or two into my time as a trader. So that was quite a baptism of fire, quite an education. So I think that being the first one, that was the big one. I mean, the day Bear Stearns went, Lehman Brothers went, they were unbelievable days. And these sort of knocks that you get as a trader, because there was a lot of downside volatility. I was mainly trading precious metals at the time. We've been saying to our clients, this is the hedge against these sort of events. Yet gold got whacked for 30% during this period. So there was a lot of anguish, a few equity calls, margin calls for clients that are never too pleasant. After the first couple, you get the hang of it. But yeah, I think the great financial crisis was one. I guess newer traders have seen the same thing with COVID. Yeah. And even this year, we've had the Trump tariffs, right? And more so, a day I'll never forget was a day I wasn't even at my desk, which was Trump's U-turn on tariffs, April 9th. I was sat in a beer garden in New York speaking to a friend of mine who invests a little bit of money, and he's the one who told me. He was looking at his phone and was like, wow, Trump's U-turned on these tariffs, 10% across the board. And I was sat there, head in hands, thinking, why did I pick this day to not be at my desk? So I won't forget that day, but that was not because I was there to feel it. It's just I saw what happened and thought, one slipped through my fingers there.
Fair enough. Well, I would like to say, I think no other crisis compares to the 2008 financial crisis, because things were extremely different back then. Internet wasn't really a big thing. There wasn't social media. People weren't at home. They were all at their trading desks. It was a whole different environment. So it must have not just been you at your desk. It must have been you and hundreds of other traders as well.
Yeah, I was in a big place. There was probably 25 traders in there. Yeah, it was hairy, but we were in probably the right place at the time. We were trading metals. Granted, we were doing industrial metals as well, which were getting slotted. But yeah, the precious metal complex was destined to turn, and we've seen this at the bottom of 2008, the bottom of the COVID crisis. Normally, gold is the one that picks up first. So, if we get another one, maybe at the end of this AI boom, if it proves to not follow through, yeah, maybe if gold starts to turn around, then maybe you're not too far away from equity markets doing the same. That's kind of my long-term takeaway. Something I'll definitely watch.
Fair enough. According to some historians, they say these economic sessions tend to repeat themselves every 7 to 8 years or so. So I think we might be due one soon. Let's see.
All-time highs, but yeah, don't short them. But yeah, we're in the zone.
Perfect. Now there must be some things that you must have learned from trading in that sort of environment in 2008 global crisis. So you were trading gold, you said, during 2008 crisis. What was it like to be in the middle of all of that chaos, and what did it teach you about trading?
So I was kind of trading other people's money at the time, so it wasn't my own book. So I guess that just in a way it's harder because you've got people on the phone asking questions, what's happening, why. You've got to kind of justify these markets a little bit. I mean, it was just, as you'll see with these crises like we had with COVID, it's just a big liquidity draw, right? They just sell assets, people selling gold to cover margin calls in other products. But risk management is key, right? And whenever there's volatility, and typically the volatility is higher, if you look at the VIX, volatility is higher when stock markets are falling. You've got two options, right? You can either trade with your similar stops, not advisable in my opinion, and try and gain really large risk rewards on the trades that you do catch, or you account for those larger ranges, wider stops, bigger targets. Bigger targets are definitely available in those sort of environments. So I think just adapting your kind of stop levels, maybe size down a little bit, would be advised, rather than just trying to hit the same entries with the similar sort of tight stops that I like to use. It doesn't work well in high volatility markets. So yeah, stretch them a little bit, but those big gains are available. So on a risk reward basis, you can get there and even greater rewards when you're there.
In order to get big gains, I I would have to assume people would actually have to know what direction to actually trade in.
Well, it's fairly clear in those environments, I have to say.
So
Just got to be patient.
Yeah, tend to just do the opposite sometimes because of just how misinformed they are. Any tips for people that you would like to tell them as to how to interpret news, and should they be a part of it if they feel too chaotic, or should they not even trade?
Yeah, the Trump situation this year was like this a little bit for me. I got my ass handed to me on a couple of days. But the key is to just walk away, right? If you're hitting your risk per day, just because of some other people in the office are maybe making money that day, it's very easy as a new trader to get dragged in going, no, there's money here for me, there's money here for me. Before you know it, without experience, you could be doing some real damage if you're not catching the moves. So trying to silence the room, it's hard in a trading floor like this when you have other traders, some probably doing well, others maybe not. Those who aren't looking around the room, seeing people whooping and hollering can be quite difficult for new traders. You get that FOMO. But walk away. If you're hitting your risk limit for the day, just because it's a volatile market does not mean that you're guaranteed to make money. This is kind of the reflection that I do have on that April 9th rally. I'm looking at it going, this must be the easiest move in the day. There's a chance that I'm long and I get stopped out on every trade. So I'm at peace with it almost a few months later.
So basically, if you don't know what you're doing, just don't bother trading.
In those environments, you got to be super careful. In general, if you don't know what you're doing, learn before you trade live money, demos, education. You'll be unlikely to naturally make money as a trader unless you have some strategy to it. And with your system, your entry and exit strategies, your risk management, and how to get your brain in the right place. These kind of 3 pillars are non-negotiables to a trader. Without all 3, you're going to struggle.
Perfect. Thank you so much for that, Chris. Now you mentioned something about fear of missing out, and with fear of missing out comes panic as well. So most traders panic when they see their investments or trades, very close to their stop loss. So how do professional traders stay calm when things get really ugly?
Yeah, managing mindset is difficult. I would say it's probably the final frontier. So I mentioned those 3 pillars. Having a strategy, doesn't really matter what that is. Then you've got yourself risk management, which should be pretty hard rules. I know Exakota said that every trader should trade by their rules and make rules, trade those rules, but then know when to break those rules. So it's kind of an oxymoron, really. But having this kind of approach, I think, is really important. So mindset is the final bit where that can twig. Even if you're good at strategy, you're good at risk, your brain can kind of get the better of you sometimes. So just having you don't want to rock into an office on a busy day with a hangover, or having not been to bed, having made a chunk of money the night before. You need to be pretty, not zen, but you don't want to be overconfident, nor do you want to be down in the dumps, feeling depressed about your trading. You just kind of want to come into every day pretty placid, pretty stoic. That at least creates the foundation for success. If you're, feeling like you've been beaten up recently, you're more likely to have that snake bite effect where you're reluctant to put trades on, potentially, or revenge trade, even worse. And if you're elated as a trader, then a lot of traders' worst days follow their very best days. It's that casino money, kind of house money effect. So just trying to keep yourself in a level zone, I would say, is important every day.
Right. So also one more question is, so definitely, like you said, mindset is extremely important. Is there anything in particular that helped you get your mindset to a level that has allowed you to stay in the game for over 20 years now? Like reading books, meditation, mindfulness.
Yeah, I would love to do more meditation and mindfulness. I know Enzo in here is our kind of psychology guru, and he's all over this sort of stuff. I do little bits, but I could do more. It is a good tool. It is very good for your brain to do this, just to keep that calm. I find exercise for me is one that kind of suits my personality a little bit. It's a little bit more proactive, and I find that without doubt improves my trading. So and even especially like cardio, right? Your systems are built to your cardio system. The healthier that is, the better things are going to get around your body. So it's going to help you, right? If you're taking all the supplements that people take these days, without good cardio systems, it's not delivering to the brain in the same way. So especially cardio, I'm sure I could do a bit more. Yeah, I think that's good.
But we love cakes too, so.
Well, yeah, luckily I don't have that vice, but I have a few.
Fair enough. Now, so you said cardio, you said mindfulness practices. Now, there's one thing that you guys shouldn't be doing is watching Wolf of Wall Street and do things that they say. So don't fall into the wrong trap. Do the right things. Go to the gym. Sleep on time. Have a routine. right? So these sort of things are going to help you as a trader.
Yeah, we're not promoting cocaine in this office.
Absolutely not. No. Not on camera. Right, next question. So what's the biggest myth about trading that you wish people would just stop believing?
Social media platforms are very targeted towards a lot of get rich quick sort of strategies or sales pitches. You see a lot of young guys and girls in front of Lamborghinis and maybe AI generated private jets. And this is not a get rich quick scheme. It's sold by many as that. This is a get rich slow and consistently scheme. So to have a kind of change from doubling accounts, flipping accounts, getting huge gains into more of a slow and steady wins the race mentality. Because the aim of the game in trading every day, the one thing you can control is to not blow your account and to not do too much damage. Whereas if you are gunning for huge gains all the time, you are vulnerable to those big drawdowns. And avoiding drawdown is probably the most important thing in trading. So trying to get people to move from making tons and tons of money very quickly, if you can get a system that's consistent, the compounding effect of trading is incredibly powerful. Even at 50% a year, you can become, even with 10 grand, 11, 12 years in, you're into those 7 figures.
Yeah. I think it's all to do with people have certain expectations based on social media, based on a lot of things outside of their control. And once they fall into that sort of trap, it's just a downfall if they do get into trading for those particular reasons. So in order for you to stay consistent or be in the game for longer than anybody else, the best thing that you can do is look at trading as something which is a business. A lot of people think it's just a side hustle, it's just something that they can just come in and start making money from day one. Possible, but likely for you to have longevity, maybe not. And it's all to do with you having to manage your own expectations. And even with you, right? So you are a successful trader, but I don't really think you will ever go down the path of spending cash for things that doesn't really matter to you, like driving Lamborghinis, Ferraris, and going on expensive holidays. It's just money management.
Holidays are my vice. Yeah. I'm not a car guy, luckily. That saves me money. But the money you have in your trading account is directly proportional to the amount of money you're capable of making, right? If you've got a 200k account all of a sudden and you take 100k out to buy a fast car, all of a sudden your earnings potential has been halved. Mm-hmm. So yeah, you don't want to be drawing tons and tons of money out of your trading account unless you absolutely have to. So there are ways with funded programs and things you can do this with these days, where you have your own capital that can just accrue, and then you can be earning month to month from funded. I think that's a better way. Still, the more money you have, the more money you can make.
Yeah. So stay in the game long term. Don't think short term at all. Now, another question. So if you could go back to when you first started, what's one mistake you would avoid and one thing you would do sooner?
What would I avoid? Yeah, system hopping early on was probably one of my problems in the very early days. So I was in the days before we had all these kind of online educational resources. So I was learning from a book, right? John J. Murphy's Technical Analysis of Financial Markets was kind of my Bible. And in there are 25, 30 different strategies that you can apply. So I was learning about these, and the way that he described them, I'd recommend anyone to read that book. It is excellent as an intro to technical analysis. But I was trying things, seeing it work for a while, seeing it not for a bit, on to the next one. Seeing it work for a while, seeing it not, on to the next one. This has probably helped me as a teacher, because I've been around the houses a little bit with trading. But as a trader, it held me back from making progress, because every system can work, in my opinion, so long as you have a good risk management structure and good approach to it. So I think that was one thing that I could have learned sooner. And the other question was, the back follow-up question.
What would you do sooner?
Sooner? Take it a little bit more seriously sooner. I mean, I was young, and this is very common for young traders, right? You earn your money, you go and spend a little bit. I would probably have been a little bit more stoic with my early days as a trader. And I would have then had bigger capital to play with more quickly, had I been a little bit less frivolous. But you've got to live your life too. So there's a balance. You want to enjoy a little bit of your proceeds. But I probably went a little bit early on.
Fair enough. Now, the things that you just mentioned, I think every trader has to go through them. No one can listen to your podcast and listen to, somebody else's mistakes and then learn from it. Because this exact thing that you just said, I think every trader has that phase. If they get to the 10th year mark, that's when they, or 5 to 10 years, I would say, that's when they get to decide that, you know what, whatever I've been doing for the past 5 years haven't been working. I should just stop doing that and just do the exact opposite, which is not system hop, take things seriously, manage my money, manage my expectations, and that is the only key thing that will allow me to get profitability.
Yeah, when you're 5 years in, I think you should probably be there. It's those first two years or so I think can be difficult and challenging, and there is no problem testing multiple strategies. But once you have one that you've back tested, forward tested, tested with live money, and it's working, you monitor the data to see when it works, when it doesn't, how it's functioning. But just trade that. No problem testing other strategies in the background on demo or just on backtest to see if you can add some different weapons to your artillery. But I think, yeah, system hopping can slow progress to traders. Literally, RSI divergences can work. I don't think it's the way to trade. It's not the way I trade. But if you trade it for a while, quit, jump on something else after a few months, yeah, you'll find it's a habit. Everything in trading is habit creation. If you system hop, start to system hop rather than just tweak, then you might find yourself system hopping 6 months, a year, or longer from then.
Yeah, I personally am extremely guilty of doing the same when I first started, because I was a teenager, emotions were way too high, and it was like, it doesn't work, onto the next, and that's exactly what happened for the first 2, 3, 4, 5 years. So now I would say, I'm kind of like settling now and just sticking to one and tweaking, like you said. If it doesn't work in certain market conditions, we can see how you can refine it. And that's exactly what everyone who's watching and they're in their year 2, 3, 4, even 5 should actually take this advice and run with it.
Yeah, I think it's a really, really good one to try and avoid. Just to make that quicker progress. We want to get there as quickly as possible, right? But let's just get there walking, not sprinting.
Absolutely. Now it's the last question. It's been a pleasure asking you this question, getting all the insightful answers as well. Final question to you is, if you had to bet on one big opportunity in the next few years, what would it be? No typical answers.
Bond trading. I think in a world of higher interest rates, higher for longer interest rates, we're in a world where bond volatility is going to be significantly greater than it has been for the whole of my trading journey, right? Pretty much from 2008 and 08, 09, interest rates have been, certainly in the UK until this move, basically zero. So trading bonds has not been that easy to do. There's not been a huge amount of volatility, but with our interest rates now up in the UK as of yesterday at 4%, there's a lot of opportunity for volatility in here. So I think bond trading is not frowned upon, but it's overlooked by a lot of traders.
It's not fancy.
No, but the bond traders in the 80s were, 70s and 80s were doing incredible things. Yeah. And now the interest rates are kind of coming, look to me at least, to be established. I don't think we'll see 0% interest rates again for the next 10 years, or close to it in the developed markets. So yeah, I think bond trading could be a really interesting place.
Yeah, like you said, it's extremely overlooked. No one even consider looking at bond trading or interest rates or anything of that sort.
Yeah, I would say, just as a note on this, probably want to trade futures if you're trading bonds. A lot of the retail platforms charge prohibitive spreads on bonds, so if you do want to have a go at bond trading, unless you're swinging, I find that a little bit harder with that market. It's possible, but if you're day trading bonds, you probably need to be in futures.
Where could people go to learn how to trade bonds? Do they reach out to you?
Yeah, we teach bonds here, FX, commodities, indices, even crypto as well. So we cover a lot of bases. We can. A lot of the systems that I use work well for bonds as they do for commodities and indices as well. So, but that's typically where I trade: S&P, Nasdaq, gold, oil. Where I'm spending a lot of time, a little bit on Bitcoin, day trading. But yeah, bonds too, I think, can be used in the same way.
Right. So you know where to find us. So it's at Educated Trade Instagram, and Chris's Instagram is at CVolume Profile.
That's right.
So if you ever want to get into bond trading, let Chris be your guide. And with that being said, that was our last question for today. Thank you so much, Chris.
Thank you, Victor.
And we'll see you in the next one.
Hi, yeah, so this content now is going out. I've stopped the YouTube stream, so this is solely for you TikTok watchers there. So just going to quickly, off the cuff, interview the interviewer. The interviewer has become the interviewee, or I'm not really sure how that saying goes. But you know, if you do have any suggestions out there, please feel free to correct me and send us lots of roses. Yeah, so Ijot, so you have now been working here at Educate to Trade for how long?
2 years.
2 years. Wow, that's great. So how did you get this job, and what was your journey like?
Oh, that was a very turbulent time in my life. I had just moved from Leeds, Yorkshire. I was working at Lloyd's Bank at that time as a stockbroker, execution only. So then I saw an opportunity to move to London again, and it was a hedge fund, which was one of my dream jobs, to be honest. And the day when I walked into the hedge fund, I realized this is not the place I want to be, because it sounds and looks really good from the outside, and then it just wasn't something that I just saw myself doing for the rest of my life. So then I started looking, and because Educate to Trade was extremely close to my previous job, then I just inquired about if they are hiring and if they are not. I just sent my CV to them, and I didn't really have a lot of trading experience back then, so then I had to do a program. Okay. And I agreed to do that because I saw potential. I met one of the head traders before we even get into the program, so on and so forth.
Who was the head trader at the time?
At that time, it was Neil.
Okay.
Neil Crammond. So yeah, we had a little chat, and to be frank, I actually came at 6 a.m. because my job started at 7 a.m. Used to start at 7 a.m. So I had to come in at 6, and him and I were the only one in the office. He was doing his morning missive. He used to manually write down the emails to send out to traders. So at that time, we was just him and I, and we had a long chat. And I decided that, you know what, this sounds like a place that I would love to be, because they're very friendly. It's not like, you know, those financial companies that just get you in and you're just a number, and all they do is just bully you. Or
I'd agree with you, because I've been working here now a few months, and it is a very community based workplace. So I definitely agree with you there. Very nice to work here. Also very nice to get educated here. I am also too on my journey for you know, learning to trade and becoming a profitable trader. So I'm taking, they taught you along the way to trade. Yeah. How is your journey going at the moment?
I'm saying it's way better than how I started.
Yes.
Because when I first started, I was purely trading based on technicals. Now I still do trade on technicals, but I had you know, an injection of a lot of information and knowledge when it comes to macroeconomics that I now do incorporate. Meaning that I was completely disregarding macroeconomics, geopolitics, economic calendar, so on and so forth. And now I just have a very good understanding of how these things work, how the market moves, what actually, you know, increases demand of you know, a certain asset class, and increase it as well. So that's what allows the price to fluctuate. Yeah. So having this information allows you to stay in the market or get out of it based on the releases, and not just based on your technical analysis. Because as much as technical analysis do work, however, without having this information, you may get just knocked out for no reason.
No, I understand what you're saying, and you know, a lot of the big institutional traders are actually just solely trading macroeconomics, but looking at levels on charts, just simply to see if price can break through those levels. Yeah. And yeah, I mean, I've noticed from when I've come here the importance also in understanding macroeconomics. And with that said, we have actually put together a little scholarship program to actually teach these new students coming up the value of learning macroeconomics, and we've set like a whole infrastructure up for them to learn and to also demo trade. It's kind of, would you say that it's it's more like also an experiment for us, just to see how profitable we could make people just from um, trading macroeconomics. Or what's your take on the program?
Yeah, well, absolutely. I had no idea that you're going to speak on this, but it's a very valid point. So it is an experiment for us, and it's a very good one as well, because what happens is when you teach people technicals and fundamentals, they end up getting confused,
Yes.
because it's like you have to go through a journey to understand this. Either you start with macroeconomics or either you start with technical. If you start with both, this is good, but it's just a little bit confusing. But if the right thing to do is macroeconomics, I do feel that the turnaround rate of someone to get profitable is way quicker, because there's virtually no emotions attached to it. Because once you're in a technical based trade, it goes up and down a lot. It doesn't have to move immediately the moment that you get into a trade, because it doesn't have to. But when it comes to macroeconomics, either you're right or you're wrong, and you get to know that pretty quickly.
Where I think a lot of the boys found out yesterday whether they were right or wrong.
Yeah, exactly.
Didn't go too well for some of them on the old interest rate change there, but you know, they are learning. So one of our well, I'd say guys, but girls actually made a profit on that, didn't she?
Yeah, she did. Yeah. So she got the direction right.
She got the direction right. So yeah, it was a bit of an unexpected result on the markets yesterday, wasn't it?
It wasn't. It's just to do with your research. Everything with macroeconomics is to do with research. Everything is different. Like even if it's interest rates for bank, that Bank of England is talking about, like the Fed is talking about interest rates. They both assess the interest rates very differently.
Okay.
So basically, what happened was, and why people got confused, is because Bank of England not just says about increasing or decreasing interest rates. It's also to do with the votes that the members have to do. And
yes.
There's like 9 members, and if it's skewed to one side, which is making the currency strong, then regardless of the interest rate decision, that's what's going to happen. And that's exactly what happened. So they decreased interest rates, which is bad for the currency. However, the votes said otherwise. That allowed
it was 4 to 5 votes,
5 to 4.
5 to 4.
Yeah.
I don't know which way to get it around.
Which allowed the currency to gain strength instead.
Okay.
So that was one key element that if people were missing on the trading floor that day. But however, the thing is, it's all a learning curve. And to answer your question, I do believe that if someone just starts trading off of macroeconomics, they have a higher chance of getting profitable very quickly.
Oh, that's good stuff. All right, cool. So, just moving on to your role here in the company. So you've kind of worked your way up now to actually. I mean, your title was so long. I'm going to be honest with you. I create the stream. I could not fit it on, so I've actually cut your title down to business manager, but I had to cut the strategist off. So now you're just business manager, which I think is more punchier, right? And it definitely fits on the stream name title. So
I wouldn't like to say I'm a manager. I would rather say I'm a strategist, because I don't really manage things. I just strategize, and Brad is the one who actually manages and oversees, because he's a CEO. So I would like to say I'm a business strategist, and everything to do with increasing revenue, getting something. I'm the guy behind it, and of course Brad as well, because we work extremely closely. And
and you're currently the AI guru. Anything AI you need, Ijot's saying is if it costs money, he can build it out of AI. And I'll give him his dues. A lot of the stuff he has actually built out of AI. How are you finding the AI tech now? And how? So let me take it back. How long have you been using AI?
Good question. Using AI. I think I was first introduced to AI in 2021.
2021.
2021.
Okay, so
I didn't really get to use it, but I realized there's a whole different world that I'm not familiar with, and I just started learning and reading about it. So that was when I was doing my master's. So my master's was in fintech, financial technology, and then I had a core module on machine learning and artificial intelligence, and that was to do with artificial intelligence in trading.
Okay.
That's when I got to know about AI. But as time moved on, there's quite a lot of tools that are now introduced to wider audience. So I really and truly started using AI like a year ago, year and a half actually, I would say. And the first project that I built ever was a chatbot.
Okay.
Yeah, then it was extremely difficult to build one. I built a chatbot, like a decision tree. So that was my first ever project that made me get into it. And now anything and everything that I do is just using AI because it's just way easier, simpler, cheaper, and
So,
just more efficient.
So it seems like you've been quite an early adopter of AI.
Yeah.
So how are you finding the AI growth curve? I mean, is the growth curve getting exponentially bigger?
I think
Like
it
a
is.
healthy trading account.
Yeah, a healthy. Well, it is getting bigger, 100%. Because last year there wasn't a lot of people talking about it, but now every other aunts and uncles have ChatGPT on the phone.
Yeah.
Now ChatGPT is like the bare minimum of AI. That's not AI is not just GPT.
Well, I mean that technically for the viewers out there, it's is it a language learning module?
Yeah, large language.
Yeah, so I know a lot of people say it is AI, but it's technically got AI in the background.
Yeah.
But basically, you feed it language, and it learns off of that, and it basically spits it out, and it's got some calculations and computations in the back. And obviously now it's live on Google and other web platforms, so it's being able to filter data straight from it.
Yeah. I think I would say the world has now moved to phase one of adopting to AI. That is just ChatGPT, and then there's people like me who have other things on the side that we have adopted and adapted to. Now this is just phase one. By in the next 5 years or so, this time in the next 5 years, I think things will be a lot more different. I think businesses would have adapted AI to the T. The ones who actually like growing.
Well, I think we're going to be forced to, aren't we?
I wouldn't necessarily say you will be
Like
forced
online
to.
banking, COVID.
You would have a choice,
Okay.
and then if you are smart enough and if you have rational decision making, normal rational decision making skill set, you would want to adapt to it because it would make no sense for you to do things manually. Because it's like I said, it's extremely cheaper. It's just very cost effective. It's very efficient. It makes no excuses. It doesn't go on lunch. It doesn't go on holidays. It doesn't have to eat or piss or shit. So yeah.
Yeah. So obviously this is just AI in general. Let's discuss what us as traders. What could we maybe expect over the coming 5 years in the AI space for trading?
Absolutely, I think it's very exciting times ahead. Why do I say this? Is because for the past 5-10 years, majority of people started trading in the past 10 years. Trading wasn't even something that you could get into 10 years or so ago if you didn't have $1 million in your bank account.
People are doing it on their phone now, aren't they?
Yeah, they are, and it's only to do with technology. Because of technology, people can now easily get into trading. Like I said, 10-15 years ago, that wasn't the case. It was just extremely difficult. You need to have a decent amount of size to actually get into it, and then prop firms came in. Again, technology. Now, 5 years down the line, what I see happening is every single trader would have their own AI algo that they would attach to their trading account. They would trade manually. However, everyone has an opportunity now to build an algo without the help of any expensive.
Prime Minister Donald Tusk says, "I think a pause in the conflict in Ukraine
That's the
could
squawk,
be
by
close."
the way, people.
Okay,
It's
be
quite
aware,
loud
Prime
today.
Minister of Poland, Donald Tusk,
Prime Minister
says,
of
"I
Poland.
think a pause in the conflict in Ukraine could be close. Keep your eyes on oil."
So yeah, if you are trading out there, keep your eyes on oil because there's been an announcement, so there could be a pause in the conflict.
Yeah.
Exciting times. That would definitely fare our macro trading students here. So I hope you guys are looking at the charts for that oil and for that announcement.
Not in financial advice.
Yeah, definitely.
Not
Yeah,
financial
we
advice.
have to say it's not a financial advice. So yeah, so what you were saying is with AI, it's going to help with algo development.
Yeah, absolutely.
Yeah, because we're getting quite heavily into algo development here at Educate to Trade, aren't we?
Yeah.
Because we see that it's definitely part of the future, and it's one of these things that you can either be a part of it or left behind. And I understand at the moment, looking and watching podcasts, that it seems like hedge funds now 20% was only, or I don't know, or is that a lot? 20% of their actual profits now come from using algos. Yeah. So, what's your thoughts on where algo development will be over the next few years for trading?
Yeah, I would like to say, please don't to take it in a wrong manner. It's a little bit of misconception thinking hedge funds have just now discovered AI. That is not true. Banks, hedge fund institutions have been using artificial intelligence for longer than they even knew.
Well, you
AI
used to
existed.
work at one, so you know.
Absolutely, yes. It's just they now have made this available to the wider audience. So with banks and hedge funds, they have been using it, for past however long years, 50 odd years, or even more than that. But what I see happening is all the things that were once gate kept or only big players could use now, an individual who's, I don't know, lives in Cambodia or I don't know, Colombia can now use it as well because of how cheap it is due to technology. So every single person has now an opportunity to build their own mini hedge fund, and in their homes.
Yeah.
And it's only to do with AI, and they get to build an algo based on their own strategy that they're using.
But obviously, hedge funds now are probably onto the next thing that we won't even know about, and we might have access to in another 10 years, right?
Yeah, well, there's one thing that people can't do, which is high frequency trading.
Okay.
So that's where the competitive edge of all these funds and banks come into play. So I don't think getting into high frequency trading is something that is affordable for most individuals out there.
A lot of prop firms don't even allow high frequency trading either, do they?
No, they don't, because it's just to do with once you have cracked the code, because it's very statistical, then you are bound to be profitable, really and truly. So prop firm model, a lot of prop firms, I would like to say, they make money when you lose.
Yeah.
So they wouldn't want you to win anyway.
So as just for the viewers that might not understand, and obviously me being very new to trading, I just wanted to understand what high frequency trading was. As the way I understand it is basically making trades from tick to tick, or even maybe 2 ticks at maximum. So is it almost kind of like what market makers do?
No. So look, market maker job is nothing but to fill in your positions.
Okay.
Like a broker. So broker is directly in contact with market makers is contact with the rest of the market. So if you place a trade, it goes to a broker then goes to the market maker then goes and finds someone that is going to then match with your trade. And this is what happens within a matter of a second or so.
Yeah.
So this minute second trading is called high frequency trading.
Okay.
It's just to do with understanding where the buyers are, where the sellers are, and just going in that direction, taking a few ticks and out, taking a few ticks and out.
So holding trades for like milliseconds to seconds instead of scalping.
Because it's very statistical. It's nothing to do with anything really. It's just pure maths.
So that is something that technically an algo could be developed. Because this is a thing now. Algos, they're great, but they only do what you tell them to do. So because obviously it's a computer program. Now, do you think that there's a point maybe with the escalation of AI that we might get to a place where algos are not only just mechanical but could also have some sort of reasoning and understanding like a human, and be able to make calculated decisions on, so maybe more, I don't want to say emotional decisions because they're still machines, but you see where I'm coming from, what I'm trying to say, right?
Yeah, so the name itself says artificial intelligence.
Yes.
So this intelligence only exists when you train it, and once you train it, it can then tap into that intelligence and then make decisions based on that. So I do believe we are moving into that world where you then get to decide to have something that allows to make decisions themselves. But it's like a double-edged sword because we have had a lot of cases where things would just go rogue, like the bots that you would build just start doing their own thing.
Like Terminator, Skynet.
Probably, yeah. And then the crazy thing about all these movies is they actually prepare you for the future, because it's just bound to happen. Like all these things that we feel that have suddenly existed for us is not true. It's just a plan of the evolution of the mankind.
Well, maybe it's already happening. Maybe we are living in the Matrix.
Well, I'm not gonna go into that because it's all
We're all just batteries.
Yeah, no, we're talking about trading, so let's just keep talking about trading. But anyway, what I'm trying to say is, so these things already do exist.
Yeah.
It's just, later down the line, I don't think it will be something that people would have access to. It's too dangerous to just give to anyone.
Yeah, no, I understand. Yeah. Okay, cool. Well, I feel like we've done our 25 minutes. So, guys, this was a test stream so we can get access to the real goods on the live studio, which is being able to plug in OBS via virtual camera. This was our last one, so next time you see us, we'll probably be doing live trading, and it will look a hell of a lot more professional. So, guys, thank you very much. Ijot, thank you very much. It's been a delight watching you interview and being interviewed.
Yeah, that was well, so many, I guess. Thank you, Russ.
Oh, hell yeah. Apologies, but I will.